Pinterest reported quarterly financial results that are sending the stock price down more than 10% in the aftermarket hours following this earnings release. Of course, I'm disappointed in that because I've had Pinterest stock rated as one of the best stocks to buy this year, and these results or the share price reaction is not attractive for me. Now, I will review these quarterly figures and update you on my recommendation and let you know if I still think this is one of the best stocks to buy, or if there was something in these quarterly results that suggest selling these shares would be more prudent. I'll discuss all of that in this relatively short video, so let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So Pinterest management team said that we're also excited that Gen Z has grown to over half of our user base. We found our best product market fit ever by becoming a personalized shopping destination for users and an AI-powered performance platform for advertisers. With this focus, we believe we're well positioned to further capture market share. That's nice to hear. And typically when you hear these kinds of optimistic remarks from a management team, you don't see a stock price falling in response. But I think investors were expecting better profitability out of the company, and that's why the share price is down over 10% following these announcements. But despite the miss in investor expectations, I liked what I saw from the company. Now, one of the reasons why the stock price could be down following the earnings release is because it was already up so much coming into this update. So there was already so much enthusiasm for Pinterest stock coming into this update. And so with the update, it wasn't as exciting as investors were expecting. But nonetheless, the numbers were strong, and let me share them with you here. Revenue jumped by 17% to $998 million. These were matching those numbers from Alphabet and Meta platforms. They're around the same level of growth. It was behind the level of growth of a company like Reddit, which grew almost 80%. It's the fastest growing social media stock. And the numbers were ahead of Snap. So the company reporting, I would say, middle of the level market performance here in terms of revenue growth. Cash flow from operations soared again to $207 million. That was up 95% from the same quarter last year. And as I've been talking about with the social media stocks, I really like this space because the user-generated content business model is so lucrative. Meta Platforms generates operating profit margins north of 40%. Now, Pinterest doesn't need to be at those levels in order to generate great returns for investors, but it's already improving profitability. Adjusted EBITDA margin up to 25%, up from 22%. And if you take the cash flow from operations number and divide it by sales, you get a number that's above 20%, approaching 21%. That's significantly higher than where it was the same time last year. Not only is that number solid, but that number is also increasing over time. So the number that I've been telling social media investors to look at the most is user growth from the US and Canada. And Pinterest is delivering user growth from the US and Canada. 102 million monthly active users from this region, up from 98 million. That's 5% growth. The reason this segment is most important is because of the average revenue per user, which I've highlighted at $7.29, and that increased by 6%. You can see average revenue per user from people in Europe is only $1.30, and outside of Europe, it's only 19 cents. And those segments are increasing faster than the US, but you can see they're still only a fraction of the average revenue per user from the United States and Europe. So users from the European region are valued at roughly 1/6 that from the United States, and from the rest of the world, it's an even smaller fraction than that. That's where most of the growth is coming from. Rest of the world, 329 million monthly active users, up from 288 million. So a robust 41 million increase in monthly active users. And it's nice to see this segment increasing the average revenue per user 44%. And it's been increasing at these levels for several consecutive quarters as Pinterest's management team has undertaken monetization strategies for international users, and it's working relatively well. It's behind competitors in monetizing international users. So I expect the management team will become more effective and monetize these users more effectively going forward, as they've already demonstrated. Looking ahead, in the third quarter, they expect revenue of about 1.04 billion, which would represent 16% growth year over year, and adjusted EBITDA at 292 million. So the revenue growth rate would be a slight deceleration from the midpoint of 17% growth down to 16% in the upcoming quarter. Still, I think that's a very solid number given the macroeconomic headwinds we're experiencing. Businesses worldwide are becoming more cautious as the impacts of tariffs are starting to be felt. Worldwide tariff rates are significantly higher than where they were to start 2025, where they were at around 2.5% on average. They've now soared to around 15% on average. That's a huge increase, and there could be more pain ahead as President Donald Trump continues to ratchet up the pressure on the United States trading partners. And businesses feeling that increase in cost may look to categories like advertising to cut spending because they expect consumers to cut spending. As we've seen in the first half of 2025, GDP growth in the United States at 1.2% is about half where it was last year in 2024. So growth is slowing down considerably already in the United States, and the back half of the year is likely to bring more pressure, as that's when companies will start to implement those price increases. And with prices moving higher, consumers will be spending less and unit growth will decrease, and advertising spending as a percentage of revenue might experience some headwinds. I say might because I haven't really seen businesses pull back on advertising just yet. And I'm happy to see that because that was one risk I was afraid to see from companies. And so far, from the big advertisers that I've seen report earnings, all except Snap have reported very healthy revenue growth, including Alphabet, Meta Platforms, Reddit, especially Pinterest now. So the advertising industry is holding up relatively well despite these macroeconomic headwinds in the United States. So now let's look at valuation. As I've been sharing with you all year, my proprietary discounted cash flow valuation for Pinterest has the business now worth $89.91 according to my proprietary calculation. Shares were at $39 before the aftermarket action. As I've been telling investors, also my spreadsheets here are embedded with formulas that automatically update during market hours. So right now you're not seeing that market price updating because it only updates during market hours. So those of you that have access to this, tomorrow morning during trading hours, you'll see the updated figures and the updated valuation as a result of the earnings release. The intrinsic value per share calculation will still be well above the current market price. And so I still see this being as a significantly undervalued stock. Now, I also like to look at valuation on a forward price to earnings basis. And to get these valuation multiples, I like to go to fiscal.ai. They're my preferred data source. There's a link in the description. You'll get a discount if you use my link. There's many cool charts like this that you can get from fiscal.ai. So Pinterest forward price to earnings at 20 right now is near the lowest this stock has traded for, going all the way back to January of 2021. So whether I look at this business on a forward PE basis or whether I look at it on my DCF basis, it looks significantly undervalued. So given that updated outlook, I'm updating my recommendation for Pinterest on August 7th following the earnings release, and reiterating the fact that I believe it's one of the best 7 stocks you can buy right now. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.